Behind every device that powers our modern world, from smartphones to satellites, lies the heart of innovation, the semiconductor. This invisible engine drives the future, shaping how we live, work, and play. But beyond their silicon layers lies a realm of extraordinary potential, not just in technology, but in investment opportunities that reach across the globe. Today, we're diving into the world of semiconductor ETFs, the gateway for investors to tap into the very pulse of technological progress. From the giants leading the charge to the hidden gems poised for explosive growth, join us as we explore the best semiconductor ETFs that are not just powering our devices, but also powering the future of investments. The VanEck Semiconductor ETF, often recognized by its ticker symbol SMH, stands out as a prominent investment vehicle in the semiconductor industry for several reasons. First and foremost, this ETF provides broad exposure to the global semiconductor sector, including both U.S. and international companies. This international diversity ensures that investors can benefit from the growth of the semiconductor industry worldwide, not just within a single market. Moreover, SMH is known for its strategic balance between leading semiconductor manufacturers and equipment suppliers. This balance is crucial because it captures the entire value chain of the semiconductor industry, from the production of raw silicon to the manufacture of finished semiconductor products. By investing in companies across this spectrum, the ETF is well positioned to capitalize on the industry's growth driven by increasing demand for electronics, the expansion of 5G technology, and advancements in artificial intelligence and the Internet of Things. Another key aspect of the VanEck Semiconductor ETF is its focus on top-tier companies with robust financials and strong market positions. This focus on quality can provide a level of resilience to the portfolio, potentially offering investors a degree of protection during market downturns while still positioning them to benefit from the sector's long-term growth trajectory. Finally, the ETF's liquidity is a significant advantage for investors. High liquidity means that investors can easily buy or sell shares of the ETF without significantly impacting its price, making it an attractive option for both individual and institutional investors looking for efficient exposure to the semiconductor sector. The iShares Semiconductor ETF, known by its ticker SOXX, is another excellent investment vehicle within the semiconductor space, offering a unique set of attributes that distinguish it from others like the VanEck Semiconductor ETF. SOXX primarily targets U.S.-based companies, making it an attractive option for investors seeking concentrated exposure to the American semiconductor industry. This focus is particularly relevant given the strategic importance of semiconductors in the U.S. economy and the government's increasing focus on bolstering domestic semiconductor manufacturing and research. One of the standout features of the iShares Semiconductor ETF is its methodology for selecting stocks, which is based on the ICE Semiconductor Index. This method ensures a comprehensive inclusion of companies that are integral to the semiconductor industry, including manufacturers of chips and semiconductor equipment. This inclusion criteria means that SOXX benefits directly from the core drivers of semiconductor demand, such as the growth in cloud computing, advanced automotive technologies, and the proliferation of smart devices. Additionally, SOXX emphasizes companies with significant market capitalization, which tends to include industry leaders that are at the forefront of innovation and operational efficiency. Investing in such companies can be a strategic move for those looking to capitalize on the semiconductor industry's growth, while mitigating some of the risks associated with smaller, less established firms. The ETF structure also offers tax efficiency, a crucial consideration for investors. ETFs like SOXX often have lower capital gains distributions compared to mutual funds, making them a more tax-efficient investment in the long run. This efficiency, combined with the potential for dividend income from some of the ETF's holdings, adds an attractive layer of return for investors. In essence, the iShares Semiconductor ETF's focus on U.S. companies, adherence to a comprehensive semiconductor index, investment in market leaders, and tax efficiency make it a standout option for those looking to invest in the semiconductor industry's potential. Its strategy offers a way for investors to potentially benefit from the sector's key growth drivers while navigating the complexities and risks inherent in this rapidly evolving market. Before we finish this video, I want to remind you to click the link in the description to check out Insider Newsletter. I've reviewed over 100 stock picking services, and Insider Newsletter gets the best returns, and for a limited time, it's only $1 to try. The Invesco PHLX Semiconductor ETF, with its ticker symbol SOXQ, introduces investors to yet another dimension of the semiconductor investment landscape, distinct from both the VanEck Semiconductor ETF and the iShares Semiconductor ETF. This ETF is designed to track the PHLX Semiconductor Sector Index, which is a modified market capitalization weighted index. This methodology focuses on the performance of companies involved in the design, distribution, manufacture, and sale of semiconductors. A defining feature of SOXQ is its concentration on companies that are pivotal to the semiconductor cycle. This concentration not only includes the big names in chip manufacturing, but also extends to those involved in the design and fabrication equipment. This comprehensive coverage ensures that investors gain exposure to the entire ecosystem of the semiconductor industry, capturing the full breadth of the sector's growth potential. Additionally, SOXQ's strategy of mirroring the PHLX Semiconductor Sector Index means it benefits from a methodical selection and weighting process. This process is designed to reflect the sector's performance more accurately, potentially leading to a more precise alignment with the industry's overall growth trends. This can be particularly appealing for investors looking for an investment that moves closely with the semiconductor market's dynamics. The Invesco PHLX Semiconductor ETF also offers a blend of exposure to both established giants and emerging players within the semiconductor space. This mix can be an excellent way for investors to balance the stability of large-cap companies with the growth potential of smaller, innovative firms. Such a strategy may offer a diversified approach to capturing the industry's upside while managing the risks associated with companies at different stages of maturity. The SPDR S&P Semiconductor ETF, symbolized as XSD, presents another unique investment proposition within the semiconductor ETF landscape. XSD is designed to track the S&P Semiconductor Select Industry Index, which represents the semiconductor segment of the S&P Total Market Index. This ETF stands out for its equal-weighted index strategy, diverging from the more common market capitalization-weighted approaches seen in other semiconductor ETFs. The equal weighting methodology employed by XSD ensures that smaller companies have the same impact on the ETF's performance as larger firms. This approach can lead to a higher growth potential by giving investors significant exposure to smaller, potentially faster-growing semiconductor companies that might be pioneering the next generation of technology. It also helps mitigate the risk of concentration in a few large-cap stocks, providing a more diversified exposure across the breadth of the semiconductor industry. Another advantage of the SPDR S&P Semiconductor ETF is its ability to capture the cyclical nature of the semiconductor industry. By rebalancing on a regular basis, the ETF adjusts its holdings to reflect the current market environment, potentially capitalizing on the sector's volatility and the rapid growth of emerging companies. This dynamic approach can be particularly appealing to investors looking for an ETF that adapts to the industry's fluctuations, aiming to optimize returns through the ups and downs of the semiconductor market. Furthermore, XSD's focus on the S&P Semiconductor Select Industry Index means it includes a broad spectrum of companies involved in various aspects of the semiconductor industry, from manufacturing and equipment to design and distribution. This wide-ranging inclusion criteria allows for a comprehensive view of the sector, offering investors a holistic investment in the semiconductor ecosystem. In essence, the SPDR S&P Semiconductor ETF, XSD, offers a distinct approach through its equal-weighted index strategy, emphasizing the potential of smaller, innovative companies alongside industry giants. This method, coupled with its broad industry coverage and adaptive rebalancing, makes XSD an attractive option for investors seeking diversified, dynamic exposure to the semiconductor sector's evolving landscape. And if you really want to make money with the stock market, make sure to click the link in the description to check out Insider Newsletter. I've reviewed hundreds of stock-picking newsletters, and Insider Newsletter performs the best by far. On top of this, it's only $1 to try. So again, click the link in the description to check out this newsletter.